What's going on, everyone? The stock market is in pullback mode, and you are not going to believe today's updates. Trump sent out his take it or leave it tariff offers today, and the market is treating this a little bit like Liberation Day 2.0. There are some explosive moves happening right now, like how Tesla fell by 7% today. Bankrupt small caps like ticker symbol WOLF are short squeezing up nearly 100%. Amazon is on the verge of a breakout heading right into Prime Day, and we are set for an exciting week. So make sure to stick with us because we're not wasting any time either.
Yeah, as you guys can tell, the market was a lot different today than it was last Thursday. Last Thursday, the market was breaking out to brand new all-time highs, and today the SPY ended up pulling back pretty harshly. We can see it ended up bouncing off of pretty key resistance very early in pre-market, and then we pretty much fell all throughout the trading day, as it looks like Trump's tariffs are definitely sparking some fear in the short term. I'm not really overly surprised by this, Mike. We talked about this a lot yesterday, how July 9th was set to be the expiration day for Trump's tariffs, but now they are actually delaying it, pushing it out a little bit to August 1st, so that's going to be a big deal here. They're giving them a little more time to negotiate, but at the end of the day, there was a lot of information coming out today. We can see here that goods imported to the U.S. from Japan, South Korea, Malaysia, and Kazakhstan are now set to face 25% tariffs. South African goods will be subject to 30% tariffs, and imports from Laos and Myanmar will face 40% duties, respectfully. So that's what we're looking like here, Mike. Trump is set to send these letters out. He did already send some and actually post them to Truth Social. Here's one of the letters to the Prime Minister of Japan, kind of outlining all of the tariffs that are going on here. And this is part of Trump's take it or leave it offers. And this is really why the market had such a crazy move today. And I will just add in one more thing here that was a big deal. Like I did mention, Caroline Levick did come out today and confirm that Trump would sign an executive order delaying those tariff deadlines out to August 1st. So expect that to be signed sometime soon.
Great rundown, Tom. And looking closer at the market, we could see, like you already said, the market isn't too big of a fan of this news. And like we remember from Liberation Day 1.0, which was on April 2nd, the stock market definitely moves quite a bit off of tariff-related news. And again, like we saw from April, it was certainly in a pretty bearish way. So looking at the market right now, what's a lot better this time is that we are very close to all-time highs. So the market is in a much better, healthier spot. But at the same time, this also will make people quicker to take profits and, secure their gains before they potentially lose them. So looking at the market right now, it certainly wasn't good to see this sort of pullback. But like you mentioned yesterday, this is certainly expected, at least to a certain sense. And what is nice is for those that certainly missed the mega uptrend that we saw from April lows, if we do see a pullback here in the short term, it can certainly open up some good buy the dip opportunities, and of course some good bearish shorting opportunities while we see the market drop in the ultra short term.
Yeah, definitely. I think that these buy the dip opportunities will be amazing whenever they start to happen. And there's even a lot of stocks out there that are starting to dip a lot in the short term as well, like Tesla, which we'll be talking about in just a little while. But just looking at the SPY a little bit more, I know yesterday we went back and we looked at the COVID crash, and we looked at just that awesome V-shaped recovery that started to come from that. And then we did notice that, once that V-shaped recovery started to slow down and we started to see some true selling pressure come in, there was more of a multi-day to multi-week pullback that started forming there. Again, I'm not saying that has to happen here this time, but we are at the start of a bit of a pullback on the SPY with today's red candle. Of course, this could be a fake out and maybe we just continue the uptrend, kind of like this example that I'm pointing to here. But I do think that given how overextended we are, that there could be a pullback back to support. It's not like we have to see a major drop or anything like that, but I definitely like this recent high around 610. If we are going to see a multi-day pullback, over the next week to 2 weeks, that could definitely be a good area. And once we get there, that's where I think that a lot of dip buyers will start to look at the support a little bit more closely.
Yeah, it's exciting because it's going to open up good opportunities for those who have missed it, but at the same time, it'll also be a little bit of a test for all of those who printed money alongside this record recovery, because there's basically no better feeling than seeing the stock market just rip higher like it did over the past few months. But if you don't respect when the trends change, you'll certainly get disciplined. So we'll talk more about some specific levels to watch as the video goes on, but like you hinted at, Tom, we have to talk about Tesla stock and how it is getting punished right now. So it fell down by 6.7% today. It is the 10th heaviest weighted company in the entire S&P 500. So it also had a good impact on the market itself falling. What is going on here?
Yeah, that was definitely quite the drop, and Tesla actually lost $68 billion in market cap today as Elon is launching a new political party. So over the weekend, he did come out and say that he was going to be forming a new political party called the America Party. And as we know, Elon and politics have not went the best so far, at least not for Tesla. Tesla's shareholders were really looking at Elon to get away from DOGE, the Department of Government Efficiency, and spend more time at Tesla focusing on his, beloved stock and his beloved car business. But it looks like that is not the case here. And it's, especially as Elon makes this announcement, Mike, it just has people kind of questioning, like, what is going on here? Because Elon has been getting into so many different things. Of course, a new political party, you could argue all day long whether that's good or bad or whether it's going to make a difference. But at the end, I think it's something that definitely is a negative for Tesla stock. And I think the shareholders definitely agreed with me today. That's for sure, as it gapped down 6.79%. Mike, what are your thoughts here on the new political party? And do you think that this will end up helping Tesla stock in the long run?
Yeah, I mean, when we look at Tesla right now, there is one thing Tesla shareholders wanted more than anything else, and that is for Elon to come home and just put his energy back into Tesla. But he has been he's been focused on other things, and Tesla shareholders don't like that one bit. And when we look at Tesla now, we're back below that key $300 level. It has been downtrending very hard, especially since its all-time highs from like December of 2024, where Tesla was just under like $500 a share. Now it's at like $294 right now. And this news just like adds more pain to the already existing pain that is, there with Tesla. For like the long-term Tesla bulls, maybe you'll see this as like a longer term buy the dip opportunity, but at least in a short term sense, the trend is definitely bearish, and this news definitely hurts quite a bit. And honestly, I wouldn't be surprised to see a little bit of a continuation here over these next few weeks unless something major changes.
Yeah, I could see a continuation starting to come into play as well, Mike. And, there are some key supports and some key ranges coming up as well. Like, as Tesla trades below $300 here, there is a pretty big key low coming up around 272 to 280. If we start to really, break below that range, I could see Tesla starting to trade back towards $220, where it had, a nice quadruple bottom before popping up here recently. But as we zoom out on Tesla stock, just even more, I mean, this pullback is getting pretty rough, and it forming this lower high is not a good thing to see in the short term. So I am also bearish on this stock, and I'm going to be watching it to the downside in a pretty good way. And I do think that it trading back towards the lower end of this range could be a pretty high possibility.
Yeah, and what's great about Tesla is that when it moves, it tends to move in a pretty strong trending way, which is going to be good, of course, for short-term bearish continuation opportunities. But even for all the people out there who are looking to buy this dip up, if we do see a remarkable amount of buying pressure step in here, then maybe it could also give some of those people some short-term gains as well. So either way, keep a close eye on Tesla. It'll definitely be a fun one. But another stock that is definitely going to be on watch for the rest of this week is Amazon, as we are heading into Prime Day, but you might as well call it Prime Week this time around. So basically, Amazon, instead of doing their 2-day Prime Day event, this year it's actually a 4-day event. It's from July 8th to July 11th, so that's cool. It starts tomorrow. And this is going to be especially interesting because it is going to offer a real-time snapshot in terms of the strength of consumer spending. So basically, if we see this Prime Day just hit it out of the park, that'll show that consumers are still willing to spend, and that'll be especially interesting because as we know from the recent unemployment data, the labor market is still pretty strong. The unemployment rate is still around 4% or so, so it's totally fine, and especially if we continue to see consumers spending in heavy amounts, that'll show everyone that the market is a little bit more resilient and stronger than what I think most people expect.
Yeah, definitely. And I know that everybody likes to look at Amazon's Prime Day and they're like, okay, are consumers going to keep spending money? And I think it's one of the bigger things to look at right now. I know people also like to look at things like Walmart earnings, and they also like to look at Costco earnings potentially as well. But I do like looking at the unemployment rate too. It just shows that consumers haven't been, I would say, as strapped as people would think in the short term. Now, I know people are going to comment and tell me, Tom, well, why is it that when I buy groceries, everything's double in price and everything? And trust me, I know what you mean. But at the end of the day, the labor and jobs data is pretty big to look for here with Amazon. So hopefully we do see, consumer spending pretty well. And I would say, Mike, looking at Amazon's chart here, they have been recovering up extremely well with the overall market from their low to where they are now. They've recovered up around 38.5%. I do think that if Prime Day does good in the short term, there's a pretty big resistance coming up around $233 that I'll definitely be keeping my eyes on. If we could start to break out above this recent high around 224 to 225, I think that we could start to trade up towards the upper end of that zone again, if not even come up to test the all-time high, as the market's been making new highs lately.
Exactly. So should be exciting, and I guess don't forget about Prime Day this week. But some other interesting stuff that you'll definitely want to know about is ticker symbol WOLF. So yes, this company filed for bankruptcy, and yes, it's up 100% today. Don't ask any more questions. No, I'm just kidding. So basically what's going on here is they had a new CFO appointed to the company, which is it's nice, but still, the company is bankrupt. What the main thing is in the short term is we are just seeing a lot of retail traders just pile into this, and we're also seeing a short squeeze. So basically, the stock has a 50% short float. So when you see the stock move up by multiple hundreds of percentage points in just a few trading days, it definitely puts a lot of pressure on shorts who have to buy back shares either for risk management purposes or even just whether they want to or not because of how intensely the stock is moving higher, as a lot of shorts learned that lesson the hard way with GME a few years back. Also, there's a 487% hard to borrow rate. So long story short, there's a little bit of a frenzy going on here. Stocks like this we have seen go very crazy in the past. Of course, this is a company you want to be super cautious on, but we've seen with a BMRN or BMNR, I should say, over the last trading week, this stock went from $5 a share all the way up to $160, and we've seen a lot of super crazy small caps just go nuts lately. So we figured we'd bring this up.
Yeah, and WOLF, I know that everybody's okay, it's filing for bankruptcy, but at the end of the day, the bankruptcy is going to be helping them as a business. Like it says here, it's pretty much going to help them get out of debt. It lowers their debt by $4.6 billion and cuts annual interest payments by 60%. So again, they're not investors really aren't seeing this as something that's necessarily terrible for the company. And of course, after it gets let's say after the bankruptcy's all said and done, then we're probably going to see the company do a little bit better. So I think that does make sense, why shareholders would maybe be bidding this one up. And also the short float definitely helps there, right? If we start to get a little squeeze going, I think things could get pretty crazy with WOLF. As we can see, this stock gets pretty insane sometimes anyways, even on some of these recent dips, Mike, this stock will have nice 130% pops, another nice dip here, 77%, and even most recently, it had a pretty good recovery off of that recent dip, a nice 130% run there. So overall, this stock just likes to move off of these dips, and I think that the big question for shareholders is this going to really stop the overall downtrend on WOLF? And are we going to start to get a good materialized breakout, or is this just going to be another short-term pop for this one?
Yeah, and I think like in a longer term sense, I wouldn't be surprised if this company ends up dying. But in a short term sense, I could certainly continue to see it presenting like asymmetric like risk reward opportunities. Looking at WOLF right now, Tom, what would you say are like some of the key levels to look forward to for tomorrow?
Yeah, WOLF has a key resistance today up around $2.80. So that definitely needs to be on watch. And if we can get a good key breakout above the high of day today, you can watch it to the upside with with what I would say you'd be looking for a pretty good move, right? Like this stock is in play. It's moving a lot. So if we do get that key $2.80 breakout, $3 is going to be critical next. More specifically, I would even look at $3.10, is that's right where the gap will fill, and that's also right where recent support was before this stock broke down to these lower sub $1 levels. So $3 to $3.10 has to be on watch if the breakout does continue. In a best case scenario, we rip past there and start to trade back towards $4.50 to $5, at which point I think traders will be going pretty nuts.
So either way, keep a close eye on this one. And then going back to BMNR, which has been like the crazy small cap in the short term. Tom, it bounced off that $100 level pretty well today. What are you seeing with this one heading into tomorrow?
Yeah, this $100 level definitely needs to hold, and it even broke a little bit below there today, hitting like down around 92.50. So really, if we start to break under that 92.50 area, that's where I'm going to get a lot more bearish and start to look at BMNR back to the downside. But I did think it was pretty good how it held this $100 level today, and there could be opportunities, like let's say buying the dip off of $100 and playing it to the upside. Like let's just say today that you bought it around 100, you had like a $10 stop loss on it and a $20 profit target. You could have made like a nice like 20% gain there on BMNR with a pretty nice risk reward ratio. So it's not like the best risk reward ratio ever right now, but you can catch these little intraday opportunities and take advantage. And that's really where I think that the opportunities come in here with BMNR.
All right, sounds good. And then looking at everyone's favorite ticker symbol SPY, Tom, we are very close to this support area, right around, you could say like $616 per share. I know there's a handful of levels, with the market right now, but we are seeing a little bit of profit taking come in here. What would you say are the key points to look at for tomorrow in a trading sense?
Yeah, I really do like that 616 level that you mentioned. There's been a lot of bounces right around there recently. You could maybe even call it like a range, like 615.50 to 616. It seems like that these wicks just keep extending down on the SPY, but the low of day today definitely has to be on watch tomorrow, which is right around 618. We had a pretty clear bounce there, and I also saw a lot of support today around 619 as well. So if we really start to break under that low of day today and this range, that's where I think the SPY could get a lot more bearish, kind of like what we saw play out this morning, right? We saw a good gap down below this key support from SPY last week, and then we saw some pretty good movement to the downside. And that's really what I would look for tomorrow. As far as a key resistance level, I thought SPY had a lot of good action around 621 to 621.50, where I'm pointing out right here. There were a couple of intraday bounces and touches there, so if we could get like a good move through that, that's where I would start to look at SPY back up, and I think that 622.50 would be solid resistance there. In the short term, I think traders are a bit disappointed in that move today, though, Mike. It was a pretty bearish move overall, and just don't be afraid to play SPY to the downside or even look at other sectors, if you're not a fan of downside action.
Yeah, and like as we know, as traders, you have to be willing to adapt. Like, yes, we all want the stock market to just like rip higher, and it has been doing a lot of that, but that can't just happen every single day and every single week. So, don't be afraid to trade the counter trends as well. Some other interesting information that you'll definitely want to know about is that right now we are in a situation where the second quarter just absolutely crushed it. And historically, when we've seen this happen, it tends to lead to further like longer term gains. And when I say that in like a trading sense, I'm meaning for like the next 3 months or so. We can see that when we have a quarter go up by greater than 10%, the following quarter tends to be green 85% of the time. And even better than that, the average return is 4.7% compared to an average 2.3% return that we just see like in any other situation. So that is a good sign for any of the the bulls out there.
Yeah, it definitely is. So if you're like looking at the market right now and you're like, okay, what's going on? Are we going to get like some major pullback or something along those lines? Maybe it'll be more of a short-term pullback. Looking at this data to see 85% as the next quarter following this nice 10% quarter is obviously a pretty good number to see here. And something that I also thought was extremely interesting, Mike, is that normally as we go out, like let's say further, like looking at the next 2 quarters or even the next 4 quarters, usually the numbers start to sway to the upside in a pretty crazy way as the market generally rises more, the further that you go out. But looking at this data here, it's kind of funny how the 1 month number, or let's just say after 1 month, the market's green 85% of the time, whereas, after the next 4 quarters, it's only green 75%. We usually don't see the market have data like that.
Yeah, I guess the main message is that when you have a strong quarter, the next quarter tends to go up a ton, not only in terms of magnitude, but also in terms of frequency. So that's definitely good to see, and we will continue to monitor this data as the quarter progresses. But some other information that we definitely have to cover are some of the key events and earnings for the week. So, Tom, what are you seeing?
It looks like on Wednesday, we do have FOMC minutes at 2 p.m. Eastern time, but other than that, we're pretty clear here on the economic side of things. So be ready for the FOMC minutes report on Wednesday at 2 p.m. That could be pretty big, though, as, we could see more insights into what the FOMC members are thinking and what they might do with the economy going forward. But other than that, Mike, the earnings is also pretty clear. Delta Airlines does report Thursday before open, but besides that, I think we're pretty much ready for the setups.
Awesome. Let's get right to it then. A stock that is close on my radar is JP Morgan, and it is to the downside. So this stock has been crushing it over the past year, but it's to that point where it's a little bit overextended. We saw a recent $800,000 big money play with this one on June 27th for the 290 strike put options that expire on September 19th. We're starting to see some selling come into play here, and it's actually starting to come in sooner than I expected because we have this major psychological resistance level at $300, and we are starting to see this stock turn over closer to like 296 to 297. Also, considering that we have some broader selling happening in the market right now, that helps push this stock lower. And what I really like when I look at JP Morgan in a bearish sense right now is the risk reward. So like right now, it's right around like $200 and let's say $92. You can set a stop loss maybe $3 to the upside, which would be closer to like $295, and that's your risk. And in the situation where JP Morgan does sell off, I wouldn't be surprised to see it touch like 280 over like the next week or two, and potentially even lower, especially considering these put options have all the way out until like the end of September, and they're right at the money at this point.
Yeah, this is a pretty awesome setup with JP Morgan. Like the risk reward is definitely skewed in a positive way here. So I'm pretty happy with that, Mike. And I will be watching it closely considering that there was that big money play. They're kind of sniping this one up here at the top. So hopefully we can see it turn over a little bit harder here in the shorter term. But with my first setup, I'm looking at Palantir to the upside, actually. Palantir actually had a pretty good day today, up 3.5%. They did not care that the market dropped at all, and we can see that they actually double topped up around 139.20 to 139.50. And something that's really awesome here is looking at $140 for a potential breakout, and I'll show you why the Bookmap is so powerful here and why we call it the X-ray vision. Mike, if we look at Bookmap today, there was actually a pretty neat situation here with Palantir where Palantir had some sellers stacked up around 139, and we can see that there's a lot at 140 as well. So as Palantir was rising, 139 to 140, we know acts as pretty solid resistance, and we could even see the nice hit right here where Palantir rejected, and then even later in the day, those sellers restacked up up. And again, Palantir rejected right off of 139. So I'm definitely going to be keeping my eyes on 139 and 140 tomorrow. If we can get a good break of this range, I'll be watching it up. But that was just some fantastic action there with the X-ray vision.
Beautiful. And yeah, if you have never used Bookmap before, now is the time. This is the best sale I've ever seen Bookmap offer. Check out the link in the description in the comments down below. It's not going to last long, and it's not called the X-ray vision for no reason. So definitely check it out. And with my next setup, I'm definitely looking at Hood, ticker symbol HOOD, and it is to the downside again. This stock has been crushing it, and it's fighting really hard at this $92 level. It tested it multiple times recently, and it has been bouncing, which is good. But if we see a break through this area, there's definitely some nasty selling off, like nasty sell-off potential. Robinhood is a extremely volatile stock, which is great, but at the same time, when it does start to fall in a significant way, we see an effect where, everyone kind of rushes to the exit all at once, especially considering the stock went from quite literally $30 a share back in April up to over $100 a share just last week. So there's a lot of euphoria and greed here. There's a lot of emotional people trading it. And again, when it falls, you have people that sell out whether they want to or not because of over leveraged positions, stop losses getting triggered, and just the psychological hurt of seeing the stock that seems to go up every day start to move in the opposite way. So Hood is definitely on my bearish radar, but it needs to put some meaningful pressure on its lows. It would be great to see a break below 92. If that happens, I definitely see some opportunity pushing it lower. If it doesn't break 92, then there's just no setup here.
Yeah, who knows? Maybe we'll see a nice bounce here, but I think it's definitely getting overextended, and I'm definitely leaning more to the downside like you are, Mike, especially as we see it starting to turn over a little bit on the daily. I do think that there will be a lot of traders that starts to look at taking some profits here, so makes a lot of sense to me. With my next setup, I'm looking at Uber here for a good daily continuation. It looks like they actually killed it today, ran up to $97. They were up 3.2%, and I always like trying to find stocks on red days and find out, okay, what doesn't really care about the market right now. Uber doesn't have the best correlation to SPY. We can see in the bottom right, it's around 0.3, which is just moderate and really not near as good as many other stocks out there. So if we do see a $97 breakout tomorrow, I will be watching for the continuation. Whenever I look at the daily chart on Uber, this stock is getting pretty parabolic, and something that I do like is that today is the very first day of the breakout. It was recently double topping very close to $94, and today we finally got that good extension, and I do think that targeting $100 in the short term could be a pretty fun thing to do, but I will be careful as we get towards $100. That's where I think this stock could slow down a little bit, as we know that that's a pretty big psychological level.
Yeah, I mean, you have to respect that strength. When the market itself is a little bit weak and you have a company like Uber just ripping higher, it's definitely a good sign, and it's at all-time highs too. So very exciting, and I'll definitely keep it close on watch as well. But besides that, let's jump right into today's momentum plays. And with the first one, we have SoFi, ticker symbol SOFI, to the upside.
Yeah, if SoFi can break its double top today, right around $19.30, keep watching it up.
All right, with the next one, we have Navitas, ticker symbol NVTS, to the downside.
This stock was crushing it a couple weeks ago. It's sitting right around $6 a share, bounced off it pretty perfectly today, and that's going to be a big support. So if that gives out, watch NVTS down.
And then with the last one, we have ARM, ticker symbol ARM, to the downside.
Yeah, ARM had actually been recovering up with the overall market recently, but as we can tell today and over the past couple weeks, ARM has been selling off a bit more. If it breaks under $145 tomorrow, keep watching for a downside continuation.
Sounds good. So we have these plays on the radar for potential continuations if and only if they break through the levels listed. And then besides that, let's jump right into today's $840,000 big money trade, and we are looking at ticker symbol VRT. So this trade is definitely interesting as VRT is a large provider of the critical infrastructure and services that are needed for data centers. Their stock has been crushing it over the past few years, but over recent months especially, it has definitely been weakening. We are definitely starting to see it slow down a little bit over the past few trading days, and we're also seeing a lower high form right around this like 130 level relative to its previous highs around like 156 and even like 145. Again, these are not great signals. At the same time, these 120 strike put options that were just bought are a little bit out of the money, but nothing unreasonable. The expiration is in the middle of August, August 15th, so it definitely is a shorter term tactical trade. It's a little bit higher risk than normal given the strike and expiration, but what also comes with that is increased reward. So in the event we do see a meaningful sell-off here, these options can certainly do well, but again, it's a little bit more of like a higher risk, higher reward type setup.
Yeah, I would agree here. I do like it that it's right around resistance. If we do see this resistance hold and VRT ends up falling down, this could end up being a pretty awesome play. I am a little bit worried if it does like break through this resistance and start to like break out above 130. That's where I would start to get a little bit more worried and maybe look at stopping out of this one. It does seem like there's a pretty clear double top in the short term, just ahead of that key 130 mark. So that's what I'll be watching for as far as like an area to stop out at. But overall, pretty good resistance here, and as we can see, the last time that it touched this resistance, it definitely ran down in a pretty nasty way, and that was quite the rejection last time. Obviously, I wouldn't be looking for it to necessarily go down to like $60, but that is quite the rejection there, and this stock does trend pretty well whenever it trends. I know that it's been in a good V-shaped recovery lately, but it's getting a little bit overextended in the short term.
No doubt. So keep it close on watch. And then following up with yesterday's big money play with CNC, the $58 million monster, they held it. So this is a real trade. It wasn't a day trade. They didn't even day trade a portion of it. So this is more of a longer term trade here. These options have all the way out until January of 2027. But this is the largest big money trade we've ever seen. So just wanted to follow up on that one.
$58 million, Mike, and then they held the play today. Let's go. That is pretty awesome. I know CNC had another red day today, but, give it some time. Let this one shake out a little bit and just realize that you have to give this play the time that it needs if you're going to hold it. It might get shaky for a little while, but of course, they're going to be looking for more of a longer-term, broader uptrend here.
No doubt. And then also, we have to give a giant shout out to today's member of the day, El Wonton in the StockedUp Discord, who did very well, not only with some SPY put options where he made just under $3,000, but also some SPY call options where he made $1,000. So huge shout out to you, El Wonton. Keep up the great work going forward, and I love that adaptability. So huge shout out to you. And if you guys are into short-term trading, as you know, of course, the StockedUp trading floor is great, but Bookmap is one of the most popular platforms and softwares out there. And again, they are doing their best sale that I have ever seen. Definitely check out that first link in the description in the comments down below. This is a 4th of July sale, and it's only lasting a few days. So if you use the coupons down below, you literally get access to the lowest prices that are even advertised on their website. So definitely check it out. And like Tom pointed out with Palantir, you can see exactly where key buy and sellers are stacked up. And this tends to act as like major support and resistance levels as well. There's a ton you could do with Bookmap. Huge shout out to you, Bookmap. We love you. Your platform's awesome. We're set for an exciting day in the market tomorrow and quite frankly for the rest of the week. So it should be a great week. Thank you all so much for watching, and let's crush it in the market tomorrow.